I'm here at the very first Crypto Connect event in Miami, sponsored by Future Perfect Ventures. So today we have a really exciting interview coming up, but before we jump into it, I do want to let you know that this particular interview is sponsored by Exodus Wallet. So a huge thank you to Exodus Wallet, because without them, we wouldn't be able to bring you such great content. So Exodus Wallet is a next generation digital marketplace and cryptocurrency wallet. Very easy to use, very easy to download. It's available on mobile, it's available on desktop. You can use it on Android, you can use it on iPhone, whichever you prefer. And to be honest, it's my #1 pick when it comes to cryptocurrency wallets. Joining me today is the SEC Commissioner Hester Peirce to give us the full landscape of the relationship between the SEC and cryptocurrencies. Hester, great to have you. How are you?
It's so delightful to be here. Thanks for having me. And I have to start with my standard disclaimer, which is that my views represent my own views, not necessarily those of the SEC or my fellow commissioners.
Well, we appreciate the disclaimer, we appreciate it, and we're really excited to have you here. There's a lot to discuss, so I'm going to jump straight into it. And I do want to start with the most recent piece of news, which was that VanEck Spot ETF was rejected. So can we understand why that might have been? And also, what do you look for when you go to approve an ETF?
So as with many regulatory things, this is a little bit complicated. That was a staff decision, and the commission, that's now been pulled up for the commission to take a look at it, which means that I can't talk about that particular one. But what I can say is that in the past, what we've looked at is the Bitcoin market, the underlying Bitcoin market, is that regulated in a way that looks familiar to us as a securities regulator? And so far, there have been a number of applications, and on all of them we've come out and we've said, no, we don't think so. Over my dissent, I will say that I've written a couple dissents on this and continue to be concerned that not making this kind of product available to retail investors is problematic. I think it's an option that, again, depending on the facts and circumstances, it makes sense to make this option available to people who want it.
Of course, there was the futures ETF, which has been approved. So can you explain to me what the difference is between the spot ETF and the futures ETF, and why it's harder to get that spot ETF through? I know many people, including myself, were a lot more excited for the spot ETF.
So the point I made about us wanting to have that market be regulated in the way our markets are regulated is how we got to where we are with a futures-based product getting approved. The futures markets are regulated by the Commodity Futures Trading Commission, and that's our sister regulator, and we're very comfortable with those markets. And so something built on top of that looks really familiar to us, and we can get comfortable with that. And there's a difference between an exchange-traded product, which is a broad category, and an exchange-traded fund. The futures-based product that got approved is an ETF, which means that it's subject to this special regulatory regime that's intended to protect retail investors. And so our new chair, Chair Gary Gensler, made it clear that people should come in with applications for futures-based exchange-traded funds. And so indeed, people came in and those were approved. So it's a step forward, but it's not the spot product that a lot of people were interested in seeing. That said, there's been quite a bit of investor interest in these early futures-based products.
And given the amount of interest that we are also seeing in that spot ETF, do you have a timeline that you can share with us? Is that possible at all?
You know, I've been asked that question. I've been at the SEC 4 years, and I've been asked that question since virtually the first day I started at the SEC. And my predictions, I tend not to make predictions. I say I don't know. But I tell people that SEC time is definitely not like crypto time. It can take a very long time. And so I think, again, there's no one should be looking and expecting something to happen until we get over this rationale that we've been using, which is, I would argue, a different rationale for the one we've applied to similar products based on other types of things.
I'd like to understand from your perspective what the SEC's sentiment is towards cryptocurrencies, because we have seen a lot of hostility perhaps from the US government. The lack of clarity in the infrastructure bill, I know, upset the crypto community quite a lot. So what is the SEC's general sentiment towards cryptos?
Well, so I started out by saying that my views represent my own. And so the commission is made up of 5 different commissioners, one of whom is the chairman, Chair Gary Gensler. And we all have different perspectives on all kinds of things. And so this is no different, right? There are a whole slew of different perspectives. And then there's the staff as well, with about 4,500 people. And so there are a lot of different experiences and sets of expertise that people bring when they look at something like crypto. So there's no one view. But that said, Chair Gensler is someone who spent several years at MIT teaching about financial technology, about crypto specifically. And so he brings an understanding of the potential for the space. He also is someone who really likes a nice regulatory structure. And so I think that there are people who want to see innovation happen, but they want it to happen in a very regulated frame. And that's what we're seeing some of. And then there are people like me who say, we need to develop a regulatory framework that makes sense and that really allows innovation to happen. And I'm more worried about the objective, that we're meeting the objectives of financial regulation, which without saying it has to look exactly like the regulatory framework that we have on the non-crypto side. So there's a diversity of views, and we'll see where that ends up shaking out. But I think the positive is that more people in Washington are spending more time thinking about crypto and certainly learning more about it. And that's going to be positive, I think, at the end of the day for regulation.
So it's all about that fine line between stifling innovation and, of course, protecting the investor. There is concern that it could potentially stifle innovation within the US, and America really should be at the forefront of this inevitable industry. So what is the SEC doing to make sure that regulation doesn't make America essentially fall behind the rest of the world?
Well, and I think it's important to remember the SEC is one of many regulators in the United States that has a potential interest in crypto. So we have a piece to play in making this a very innovation-friendly place, but it's not only our job. And our mission is to protect investors, to facilitate capital formation, and to maintain, foster efficient and orderly markets. So that's what we're thinking about when we go about our job. I do agree with you that the US should be the place that people want to come to innovate. It should be the place people want to come to invest and build their companies. But we have a very strong regulatory structure here, and so it's going to take some time to figure out how to build that or amend that structure so that it works well, not only with the technology of today that we're seeing, but that it will last. And so it's not an easy project. We definitely need to get a lot of people working on it, and not just people at the SEC, but people who are investing in this space, people who are going to be regulated by whatever regulations we draft. And it's not an easy project.
It's not an easy project, and for that reason, I do just want to bring up XRP. I know, of course, you can't speak about it directly, but it might be classed as a security. So it would be helpful for the audience to understand, how are you looking at something and how are you classing whether it's a security? We'll start there. How would you decide whether something is a security?
And certainly don't want to speak specifically to any particular crypto asset. But what I'll say is that our definition in the US of security is a broad one. There's some other countries that have very precise definitions, but ours is intentionally broad. And the idea is we don't want to capture just things that, stock or bonds that you would know are securities, but we want to capture things that someone might call something different, but is nevertheless the same idea. And so in the crypto world, the one that's gotten the piece of the definition that's gotten a lot of attention is investment contract. And an investment contract was defined by something called the Howie Test, which comes from a Supreme Court case about orange groves, which now a lot of people in the crypto world know. And the idea is, if you give me money and I tell you I'm going to build something, all you need to do is give me your money. You're going to get an investment return on your money. Just sit back, I'll do the work. And then that looks a lot like a security. a securities offering, right? And so we're going to treat that as a securities offering. We're going to regulate that. And so that's kind of how we look at it through that lens. Now, there are other pieces of the definition of security, like what's a note, that may come up in the crypto context as well. But we're generally trying to capture anything that looks like one of the more traditional types of securities.
And you said that the SEC takes things slowly. We were speaking earlier and you spoke about, you can't walk before you can run. But there are other cryptocurrencies that people are concerned could be classed as a security. And I know you can't speak to any specifically, but from the SEC standpoint, do you think that there could be more and other cryptocurrencies that have the same future as XRP is going through right now?
Well, again, I don't want to talk about any specific crypto asset, but I think it's telling that our chair, Chair Gensler, has said that he sees most digital assets as being securities. And that may be a different view than I personally take. But I think there's been a very expansive reading of the definition of security, not only in the context of crypto assets, to be fair. It's been in other areas as well. We've taken a pretty expansive view. And so, that's kind of the world we're living in. So the question then I say is, okay, I might disagree with my colleagues on how broad that definition should be. But if we're going to use that broad definition, we need to think about, what does that mean? What is that? If you put the label security on something, a whole set of rules has to follow from a whole set of requirements follows from that, right? And so how are we going to deal with those requirements in the digital asset space, where those requirements could prevent people from doing things they might otherwise do? So there are a lot of hard questions we have to answer if we're going to define a lot of crypto assets as securities, as some want to do.
I want to move on to talk about the SEC's role in terms of protecting the individual investor. So I want to look at the safe harbor rule. So does the SEC actually have plans to allow the smaller investor that isn't an accredited investor the opportunity to participate in lucrative opportunities, particularly the types of opportunities that you do tend to see in crypto?
Well, so we have rules in the US that are a little bit counter to our traditional approach in the United States, which is that people should be able to spend their money the way they want. They should bear the risk and bear the responsibility, but also bear the chance to make a return, right? That should be their choice. But we have these rules that say, no, we have private markets, and those private markets are mostly going to be for people who are wealthy or have a high income. And for other people, they need to invest in the public markets. There's some exceptions to that, but mostly that's how it works. And so a lot of people push back and say, wait a minute, you have to have a lot of money to participate in this whole set of investment opportunities. And I think that's a little bit uncomfortable too. I would rather have a situation where we said, no, you can participate over here, but you're not going to get the same protections in the private markets that you'll get in the public markets. But we've been very slow to adjust that. Now, we actually did recently make it's a minor step, but in a way it's a major change in the way we're thinking, to say, you know what, maybe there's some people who aren't wealthy, who don't have high incomes, who should nevertheless qualify as accredited. So we open the door to the idea that if you have the right kind of educational certification, maybe then you should be qualified. You should be able to qualify as an accredited investor, or maybe someone will come up with a test, and maybe if you pass that test, you should be able to be an accredited investor. So I'm hopeful that maybe we'll move a little bit off this wealth and income test, but it does make a lot of people very unhappy that we have those rules in place.
Because there's a lot of unemployment right now. We're seeing high inflation, and a lot of people do look to cryptocurrencies as sort of the last resort, the only opportunity right now to really build long-lasting generational wealth. And they do feel ostracized, if they are at the bottom of the food chain, if you want to put it like that. So to what extent is it really the SEC's role to police that, to take away their free choice to decide how much risk they wish to take as an individual?
Well, I think you're raising an important question, right? From my perspective, the SEC's role is a disclosure role, right? It's to help people get the information they need to make decisions for themselves, right? And they know the circumstances of their lives, they know what their job opportunities are, they know what the potential expenses coming down the pike are. We don't know those things. They know their own risk tolerance. We don't know that. So our job, though, is to make sure that someone, when there's an information asymmetry, which means that the person selling you the securities knows a lot more about what her plans are than the person buying the securities, we want to even out that and say, you know what, person selling securities, you better give certain information to the person buying. So there's a role there to be played, but there's also a role to be played in investor education, which means that we're helping people realize you can ask questions yourself when you're buying something. Don't just put your money down and walk away and assume that everything will be fine. Ask questions. If you see something that looks suspicious, go invest your money somewhere else. There are lots of opportunities out there. And so I think if we try to make the SEC not a merit regulator, but keep it in its role as a disclosure regulator, we really do a better job of protecting people, because then we can tell them, look, ultimately it's your choice and you've got to do your own homework. Here's some material. We can provide educational materials to help them do that, provide them some lists of red flags, things they should look out for. But ultimately the decision has to be on the investor herself, not on the SEC.
Sounds like a really healthy balance, one that I definitely support, but how likely is it to see an SEC that looks like that?
Well, the SEC is not supposed to be a merit regulator, and so we really don't have the authority to do that. I think we sometimes wander into merit regulation territory where we're, trying to put ourselves in the shoes of the investor and say, you shouldn't invest in this or you should invest in that. And it's natural because we see a lot of really bad frauds, and there is a lot of fraud in the financial space, in the security space, and people do need to be careful. They can really get hurt. And so it's understandable that, regulators get concerned, but I think it's important that we maintain that balance, and that when we get out of balance, the people who we serve say, wait a minute, you're supposed to stick to your role, which is not to be a merit regulator, not to tell us what to invest in, but just to help us get the information we need.
And I'd love to understand and learn about really your experience with cryptocurrencies. So how did you first hear about it? Do you own any? Give us the landscape.
Sure. Well, I first heard about it from colleagues in my last job, some of whom were really interested in the crypto world and were doing a lot of research on it. And so I learned a lot from them about it. And then when I got to the SEC, there were a lot of crypto issues kind of percolating up to the SEC, and so those were issues that I was naturally interested in, because I think it's always interesting to see where innovation is happening and then how that innovation gets handled by regulators, not always well. I do not own any crypto. I think given the role that I play, it would be inappropriate for me to do so, so I don't have any crypto.
It's a really interesting response, because I often hear that from journalists as well. It would be a conflict of interest. But just finally, I'd also love to talk about CBDCs with you, central bank digital currencies. How does that come into play in terms of regulation? What can we expect? Is the SEC for or against it? What's the overview?
Well, so it is a little bit outside the SEC's purview, and I will say that I not only don't speak for the SEC, I don't speak for the Fed, and the Federal Reserve is looking into. They've made public that they're looking into a potential, should we have a CBDC? If so, what should it look like? What I will say is that we have a lot of private stablecoins now, and there's been a lot of growth in that space. And it's something, I think, to have competition and to have not a government digital currency, but private digital currency, I think is valuable from a financial privacy perspective. And so whereas other countries may decide that they want a CBDC, we might be able to, and I think one of the Federal Reserve officials has spoken about this, the private stablecoins might fulfill the same role here in the United States. And so that's something that we should welcome that innovation, and remember that as we're thinking about how to regulate stablecoins, remember that they can serve a valuable role in our economy.
So just finally, how do you expect from 1 year to 5 years from now, roughly, I know it's quite a long time, the regulatory framework to look like towards cryptocurrencies in the USA?
You know, it's so hard to look down the road even a year. I think this is going to be an important year for crypto regulation because there's been a lot of attention on it. 5 years down the road, it's hard to say. I mean, Congress may at some point get involved in this space, and certainly already there are a lot of people in Congress who have gotten involved. They've dropped bills about, with different potential approaches to regulating crypto. But if there were actually something that passed Congress, that would be monumental in directing how that regulation would work. I think what you're seeing right now is a lot of regulators are planting their flags by, for example, bringing enforcement actions. You hear a lot of statements coming from different regulators saying, we should have a piece of this regulatory space, but others saying, no, it should be ours. And so there's a lot of jockeying for position now, which I think we're going to see that continue in the coming years. And I think those enforcement efforts will play a role in allocating the regulatory pie. But there are a lot of unknowns, and that's why I really encourage people who are in this space, who are interested in how this space is regulated, come talk to me, come talk to my colleagues. It is better for all of us if we can build a regulatory structure that makes sense, that achieves the objectives that we have, the legitimate objectives, right, of protecting investors, having these markets function in a way that's orderly and that doesn't end up having effects outside of the crypto markets. So let's have this conversation together and let's do this in a wise way. It really should not be viewed as the government is just going to set the regulations and that's how it's going to be. It has to be an exercise that involves all of us. That's what regulation is supposed to be about. And so please keep that conversation happening. I'd love to hear from all of you. This has been fantastic to have this conversation, and I hope that we'll be able to continue having these conversations.
Yeah, I want to thank you so much. It's been such a pleasure, Hester. I think these conversations are so important. I know the community are concerned about how the future is going to look. So hearing it straight from yourself is absolutely brilliant. So thank you so much for coming to talk to us today.
It's been my pleasure. Thank you.
Thank you everyone for watching, and thank you to Exodus Wallet, of course, for sponsoring this and making this happen. If you haven't already, then hit the subscribe button, hit the like button, and so you never miss an amazing interview on my channel. Thanks for watching.